And what we're doing here is talking about the ASX versus global. Now, what we have to understand as investors is the ASX or the All Ordinaries accumulation 300 or 200 or 500, it doesn't really matter. It really is dominated by just a few sectors. And what I've done there is I've just said that the big four banks and the materials and energy sectors, and they're obviously dominated by BHP, Rio, Woodside Petroleum, Santos, etc. They account for about 52% of the Aussie market. The Aussie market is about $1.35 trillion in market capitalisation terms. And those little areas, the banks, the materials and the energy stocks, account for about, by market capitalisation terms, 700 billion or 52% of the $1.35 trillion. So when you're talking about the market, you're really just coming down to a handful of stocks. And if you want to know what the market's doing, you just work out what those 6 or 8 stocks are doing, and you basically have a fairly good grasp on whether the market's going well or badly. The second point on that page is that at the end of the day, the material stocks and the energy stocks are price takers. They have no control over the price of iron ore, coal, oil, or gas. And the underlying price of iron ore, coal, oil, and gas is at the mercy of really China and global markets. And so they are just price takers. They've obviously had their day in the sun over the decade up to about 2010, 2011, in terms of the China story becoming so dominant. And as many of you will know, China now consumes about 52% of the world's cement, 48% of the world's iron ore, 52% of many, many other the commodities. And so basically my argument is really get a good grasp of what China's doing to tell me what the materials and energy stocks in Australia are doing. If China's slowing, they're a sell. If China's going through the roof, they may not be a sell. That said, there is no doubt that the transition has largely taken place and the easy fruit has been picked in terms of, for example, iron ore going from $20 a tonne to $180 a tonne, as a simple example. The easy fruit has been picked. I think the third point to make is crucial, and that is that at the end of the day, the Australian Stock Exchange offers no real global technology opportunities. And that's obviously a crucial space to be in as modern society all around the world develops. And you end up with these extraordinary technology stocks, be it out of America, Korea, Japan, or even parts of Europe and Asia. But Australia, at the end of the day, has no real global technology stocks. We have just 2 or 3 global healthcare stocks. But I'd have to say, again, we have very, very few offerings in the scheme of things. And at the end of the day, we have very, very few global industrial offerings. So I'm talking about really classy global businesses that have been able to grow their earnings in, say, for example, 8 of the last 10 years. I mean, we have 2 or 3 of them, maybe even 4 or 5 of them, but we have very, very few global offerings. So what I'm trying to do is I'm trying to just encourage people to think outside of the Aussie market, and certainly Scaffold's new offering in the international space does that. Just a quick statistic, out of the 1,838 stocks that Scaffold follow, 84% or 1,550 have a market cap of up to 300 million. And obviously the vast number of those have a market cap of only tens of millions of dollars. So you're really a bit of a cork in the ocean when you're dealing with 84% of our stocks by number. The other thing that's interesting is that of the 1,838 stocks Scaffold follow, 2/3 of them, 1,223, don't make a dollar. So it's pretty extraordinary that we've got so many stocks that are either tiny or profitless.